Hey there, everyone. Bram Spiero here. You're watching Buy and Hold Fundamentals, another Saturday summary. We're looking at the results from our first week of looking at Greenville, South Carolina. Just to remind you, we've been looking at properties up to 150,000, and in the last week, I've looked at 100 of those. So if we start looking at sort of the averages that come out for that, and conclusions we can draw. So on average, these are coming at just a little under 100,000. The average rent is coming in at one. Well, that's a freaky number. At a rent ratio of 1.25. We're getting a cash flow of a little bit over 100. And our cash on cash return is coming out as 6%. So what we're seeing here is we're hitting a lot of the things that I like to see, which is properties under 100,000, so that the initial investment stays under $25,000, $30,000, something like that. You're getting in rent rates that are well above 1%, which helps to make sure that the cash flow stays. I want to see at least $100 a door. But what I'm also looking for is a 10% cash on cash return, and we're certainly not seeing that as an average. So if we select out everything that's below 10%. Hold on, let's just grab that. Let's see what. Not like. There we go. That's below 10%, and hold on. Let's get that centered. There you go. And we unhide all the stuff here. There we go. Just where there. That's more like it. Now, why is that different? Okay, so let's do format and get the same size. Okay, that's better. So now we're looking at averages from everything that equals a cash on cash over 10. And we're seeing that the average house price is going down by nearly $30,000. The rents are staying more or less the same, which accounts for the fact that we're now creeping up to almost 2% in rent ratio. Cash flow has gone up. It's doubled, more than doubled. And cash on cash is almost tripled. So that's a lot more encouraging. The only thing that I think we need to take into account here is what we saw over the week, which was the fact that there's a lot of variance both in the rent rates we're seeing and in the taxes that we're seeing, and some of that's got to be artificial. My first guess is that the estimates on rents that are coming out are artificial, and they're probably too volatile and don't really represent the market. So that will take a little bit of extra work to figure out what the rent rates really are. We've seen a lot of dumps, so even if something cash flows like crazy, I think there's one here at the top at 48% cash on cash return, but more likely than not, that there's a reason why it's selling for that cheap. So that's the other one. And then I think it really would be helpful to talk to someone who understands the tax rates in Greenville and can explain why they're all over the place. Because we've seen everything from $300 to close to $3,000 for properties that aren't that dissimilar. I mean, they're sometimes the same sort of sizes and prices have fluctuated by more than $1,000. So something's going on there which we need to understand. But all in all, for first week, it's pretty interesting. Out of the 100 properties we looked at, 24 passed muster. That's a quarter. That's a lot. So even if we go through the rest of the properties, and there's probably another couple hundred there to look at, and if we filter out 75, 100 of those, if you do that and then you find one or two that are worth investing in, that's a pretty good deal just getting off the MLS. So that's it for today. I'll see you tomorrow.